Welcome back. Let's tell you about Tata Steel. Well, those numbers, first look of it, look absolutely blockbuster. But, there were some adjustments that were there. So let's start off with the top line. The growth was better than anticipated. The street seemed to be sensing, a good set of numbers. The stock ended virtually at the high point of the day. So top line, no worries there. Operating profit came in at around 8,900 crores. So first look, it looked like, in fact, the margins were at around 20.5%. And the street would have been very, very excited if there was no adjustments out there. But you need to note that the operating profit of around 8,900 crores, that included an others component of roughly around 1,260 crores. That's point number one. There was a forex element as well of around 900 crores. But you adjusted just for the others header, that's around 1,260 crores. Then the operating profit comes in at around 7,650 crores. And the adjusted margins, adjusted just for the others category, it came down to around 17.6%, which is more or less in line with what we were working with. The profit number as well came in a little bit higher, obviously on the back of a better than expected operational performance. Though the problem is that the finance cost has moved up, but that was more or less on expected lines. For Tata Steel, as we always say, look at the geographic breakup. So the numbers that were declared, you had the EBITDA number that came in higher by around 79% approximately. 6,113 crores looked very, very good. But keep in mind, there was again an others component of around 650 crores. And they've mentioned that the others component includes some favorable forex gains, also one-time provisions they made in the first quarter. That was reversed. So adjusted for this, then you had your EBITDA number coming at around 5,400 crores. And then if you just try to derive the EBITDA per ton, they had given an EBITDA per ton of around 19,000 rupees on a per ton basis. The adjusted EBITDA per ton comes in at around 17,200 rupees per ton. That is better than what the street was working with, but it's not as big a beat or as big as a blowout that it looked at, first glance. Europe business, looking at the numbers, you thought that, well, Europe was more or less in line, but there was an adjustment out there as well. So EBITDA came in at around 1,100 crores, but the EBITDA per ton that they've given is around 4,800 crores. If you're looking at the Europe numbers more closely, you'll see that, in fact, they reported 120 million pounds in terms of, the EBITDA number, but out of that, 62 million pounds is others. So if you adjust it for that, then the European business didn't do well at all in the past quarter. In fact, it was a big miss in comparison to what the street was working with. Looking at the smaller parts of the business, Southeast Asia continues to see some pressure. The EBITDA number came in lower out there at around 112 crores. Bhushan Steel, we already had the numbers. That's really, something that supported the consolidated EBITDA on a sequential basis, came at more than 1,100 crores. And the others component as well came in at around 500 crores from around 450 crores loss. So just to sum things up, the debt remains an overhang on the stock. The biggest part of the business, that's the India business, that delivers a beat. Europe business, a bit of a disappointment, or a big disappointment actually, the European business.
Okay, thank you, Nigel, for that. So that was about Tata Steel, but let's move on because it's a big day for RBI, banks and power companies today as the Supreme Court is set to pronounce its verdict on the applicability of RBI's February 12th circular. Now, the Supreme Court will hear a bench of petitions filed by power, sugar and shipping companies against the RBI circular. Ritu Singh is here with more details. Ritu, what can we expect today?
Let me start by explaining what RBI's Feb 12 circular is, which is at the heart of the issue. On 12th Feb this year, RBI came out with an overarching framework for the resolution of bad loans, doing away with all other existing schemes. It simply said if a borrower defaults, within 1 day, banks would have to come together and start forming a resolution plan. And if that plan is not approved within a strict 180-day timeline, the banks would have no option but to send those companies into NCLT. Now, this was applicable for all cases with a debt of over 2,000 crore rupees, and immediately it was opposed by various companies, and especially the power companies. Even the Power Ministry was very vocal in its criticism of this circular, where it asked RBI to at least do away with the 1-day default rule. But the RBI stood its ground, and thereafter, several independent power companies, the Association of Power Producers, they all moved the Allahabad High Court challenging this RBI's Feb 12 circular. And in a late August verdict, the Allahabad High Court refused to grant them any relief. But the matter was, of course, also being heard at various other courts from the shipping companies, from the sugar companies. So the RBI requested the Supreme Court to bundle up all of these cases together in the Supreme Court, and the court did exactly that on 11th of September, where it said it would hear all of the pleas challenging the RBI circular on the 14th of November, which brings us to this day. Now, what could be expected? Scenario one could be that the Supreme Court says that there would be no exemption granted to any of these companies, which means power companies with over 1.8 lakh crores of debt, they would all head into the NCLT, which would be flooded. Of course, we know the infrastructure-related issues, but it would be a big victory for the Reserve Bank of India. The second scenario could be a halfway solution, which means the power companies, for instance, could be granted some more time before they head into NCLT to find a resolution outside that. And the third scenario could be that the Supreme Court says that there would be a blanket exemption for the power companies from the ambit of the Feb 12 circular, which would be a big defeat for RBI and a big relief for the power companies. But that said, the verdict itself is expected after the hearing begins, which is expected on the 14th of November, but it will surely set the precedent for all other cases in the future.
All right, so that's a big case today. But moving on, ArcelorMittal may have been chosen as a preferred bidder to take over Essar Steel, but the roadblocks are far from over. And what can turn the heat on ArcelorMittal's plans to acquire Essar Steel? Several operational creditors, they have moved court against the deal. Nisha Podar joins us now. Nisha, what are these operational creditors demanding now?
In yet another hurdle to the largest resolution plan against the Insolvency and Bankruptcy Code, which could really delay it or even derail the process, is that the operational creditors of Essar Steel, and several of them have moved the NCLT against the resolution plan accepted of ArcelorMittal by the COC and the lenders of Essar Steel. Now, their grouse is that operational creditors, about 30 of them who have dues amounting to close to about 500 crore rupees, they have not been paid as part of the resolution plan that has been offered by ArcelorMittal and which has been really voted in favor of by the Committee of Creditors and the lenders. Their grouse is that the financial creditors have really not taken into cognizance the payments which are due to the raw material providers to Essar Steel. So most of these operational creditors are in the nature of the raw material suppliers, and they have moved the Ahmedabad NCLT against the resolution plan. In fact, they have moved the court against the two big lenders of Essar Steel, State Bank of India as well as Standard Chartered Bank, and also the resolution professional of Essar Steel. So it's yet another hurdle really coming in the way of ArcelorMittal buying out Essar Steel through the IBC process, amongst the many twists and turns that this particular case has really seen. So we'll have to really see how the legal tangle goes on from here on, but this could be a meaningful hurdle in this particular case.
Okay, Nisha, thank you so much for that. But let's move on. Zee Entertainment's promoters are set to sell up to 50% of their stake in the company to a strategic partner. Mangalam Malu joins us with the details. Mangalam, good morning. Last evening we got this perplexing news. Break it down for us, and what could it mean for the stock today?
Absolutely, it was a surprise, unexpected, and majority of the street was caught unawares. So, Zee promoters looking to sell 50% of their holding in the company in today's market price would amount to just about a little over 8,500 crores. They say they're looking for a global strategic partner for a foray into virtual reality, augmented reality, Internet of Things, and something like 3D printing as well. Now, it's another thing that the Netflix CEO is in India. However, this release does not mention OTT or video streaming itself. Another line in the press release says that the proposed transaction to divest up to 50% stake is expected to address the group's capital allocation priorities. So could this be to take care of the debt in their real estate as well as infra arms or not? The jury is still out on that. For whatever it's worth, the stock is down 30% from the start of this year, from its 52-week high of almost 600 plus. And the promoters, while they intend to sell 50% of their holding, 59.3% of the promoters' holding itself is pledged. So let's see how that happens. The company intends to complete this sale by about March, April 2019. And for whatever time I've been tracking Zee, tell you what, the company goes ahead and announces deal. Rarely have they announced an intent. So the jury is still out on how the stock will perform in today's trading session, because on the one hand, this adds uncertainty, limiting the upside, and on the other, it has the promise of perhaps an open offer when the deal concludes, so that limits the downside too.
All right, Mangalam, stay with us. We'll get back to you with all the cues in the futures and options space. For the time, we take a break, come back, and we'll get you all the cues.